Hi everyone, let's go over my bullish and bearish low time frame and micro Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario, where we've been looking for a three-wave structure in a WXY or an ABC, and looking at the price action that we got more locally, I'm starting to favor the wave Y over here, which then is a three-wave structure in comparison to a wave C, which should be an impulsive structure to the upside. The most common target area for wave Y is between the 1 and the 1.236, taken from the low to the high of W to the low of X, which is sitting between 27.6k and 28k, which means we're going to be taking these highs for then maybe a bit of a liquidity grab and then a continuation to the downside in the medium time frame bearish scenario. So I quickly want to show you why this might be important. Because in the medium time frame scenario, the bearish scenario, we've been looking for this three-wave structure, a zigzag in a wave W, then a WXY in a wave X, and then potentially another three-wave structure in a wave Y to the downside. And what I think is nice is that so many people are looking at this support area over here around the 24k, right, between 24,850 and 24.3k. and yes, it is interesting support. However, as many people are looking at this support area, I think it would be very nice to dump through this area and move one area lower to the blue target box that I have between 22.6k and 21.8k, which means that if the high of wave X is going to be made over here somewhere, you can see that the target area for wave Y, which is then pulled from the beginning to the end of W to the imaginary potential high of this wave X, has confluence with the blue target box over here. So everyone trying to buy over here will then be baited as prices continuing to the downside, people getting bearish, but then over here might then be the potential long scenario for a big move continuation to the upside. So yeah, this would be, in my opinion, very interesting indeed. If we then go to the bearish scenario over here, we'll be looking at an impulsive structure to the downside, because in this scenario, the WXY is already finished, and now we're looking for a wave 1, 2, and then a bigger 3 to the downside, where you really want to see volume increasing while price is moving to the downside. Now, the high of wave 2 can already be in over here, as the 0.66 and the 0.618, basically the golden pocket, is the most common target area for a wave 2. The 0.786 is also common, and the 886 is rare. Right in the middle of the golden pocket, we also have the current monthly point of control, which is an important resistance area, as you can see as well. But if we manage to get above this, the next resistance area above price, which for this wave 2 is going to be very important, is between 27.1k and 27.3k. And again, if we are going to reach that 886, the likelihood this is going to be a wave 2 becomes less, basically, right? So then either this is an ABC in the bearish scenario that becomes a higher probability, or reaching the 886 might mean we will find continuation to the upside in the bullish scenario I just explained. If we go to the micro scenario, it's basically the same, because price has been ranging over here and not too much has happened. However, the CVDs have changed, the divergences. But in this scenario, we've been looking for this to be a three-wave structure in a wave W, followed by a three-wave structure in an X, and then looking for a zigzag structure in a wave Y, where then the common target for wave Y is between the 1 and the 1.236, which is basically the target box that we had between 27.1 and 27.3k. So this is a very interesting area of resistance, and the invalidation of this scenario would be if price is going to fall below the low of X over here at 27.3k. If we then go to the other scenario, the WXY is already finished, so this is then a three-wave move to the upside, followed by a three-wave X, and then we have this long zigzag in a wave Y. There's two reasons why for me this feels a little bit like an alternative scenario. That's because this wave W now needs to have a WXY inside a wave W, and usually in a WXY scenario, wave W and wave Y are more simple corrective structures. So either a zigzag ABC, or maybe a flat ABC, or a triangle, only in wave Y that is. However, in this scenario, this wave W then has to be a WXY scenario, which I don't really like. So then it's like a W over here, 3-wave W, 3-wave X, and a 3-wave Y, which is not something I really like to see. And also this wave Y over here is very long compared to a relatively short wave W. However, in this scenario, the invalidation is above 26.9k, and if price is going to move to the downside, which we then expect in this scenario, the support area that I have over here, interesting target box, is between 26.2k and 26.3k. And then finally, the divergences. Of course, we still have the bullish divergences on the higher time frame, a higher low on price, lower low on the CVD divergences. The target is 27.7k. But if we look more locally at what has been happening here on the 15 minutes, so this is the range that we have been in, and basically the whole day already so far we didn't move. But what we see is both bearish and bullish divergences, so it's a little bit of a mix, because if we look at the CVD, you can see over here lower high on price but a higher high on the yellow CVD. That is a bearish divergence, and also the blue one as well as the yellow one between this high over here and this lower high created, lower high on price, much higher high on the yellow CVD as well as on the blue CVD. So there's a double CVD over here, double bearish CVD. But if we then look at the yellow line, price moved to the downside here more locally. So we moved to the upside first, created the bearish divergences first. Then price started to move to the downside and created a bit of bullish divergences on the yellow CVD. So a higher low on price. But if we look at the CVD line over here, the yellow line, you can see that the yellow CVD on the right side moved below. So a lower low on the CVD, higher low in price, which is a bullish divergence. But from my experience, the CVD divergence that exists first, that appears first on the chart, is usually the one that has the highest probability of playing out, which in this scenario would then be the bearish one, as that is the first one that appeared on the local time frame over here. And if we actually go to the 15-minute, what I think might be interesting if price moves to the downside is that we have a double bottom over here. We have one low, two low, so maybe price can grab the liquidity for then a move to the upside, or of course we go further to the downside and then we know what area we are going to be looking for. Now please check the pinned comment as well, because tonight at 7 p.m. I can't give you an update because I will be bowling with the family. Yes, so I hope this video was helpful or valuable to you. Please check out the most recent educational update I've done for you, which is about the best trading indicator in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.